Welcome everyone to another episode of Price Targets with your host Bitcoin Jack. Welcome back. Hope you're doing fine, guys. It's Monday. This should be the start of the new week, but obviously there's some markets closed today. Not Bitcoin, but traditional markets. Some traditional markets are closed. I'm going to have a little quick look at how they look. In regards to Bitcoin, we'll just cover, the things we said last week, and then I think we need to look at maybe some macro developments. But first, guys, we've been on a streak last couple of weeks. It's been quite good trading, and it's going to be time to take it slow from here and just watch how everything's going to develop. I want to have your attention for sponsor Prime XBT, the exchange that's making these videos possible. If you've had any value in these videos, guys, please consider signing up with the ref link in the description below. And if you use the promo code BitcoinJack, you're going to get a deposit bonus on your first Bitcoin deposit. So thank you very much, Prime, for sponsoring. And I'm very happy with how we've managed things in the last couple of weeks. Now I think we're going to dive in. You can still hear from my voice that I'm a bit nasal. Pollen are gone, but last 2-3 days I've been really having like actual fevers. Like they joke about hay fever just being this mild thing, but I actually developed a fever. So I don't know whether that was hay fever or not, but it wasn't fun. Recap on Bitcoin. We're talking about this structure here, and that I did expect for price to at least give some reaction of the level. So we came into it, maybe even to the freaking pip if we zoom in on it. I think it just touched that level of liquidity. So to me, at this point, it makes the most sense for a bounce on Bitcoin. If it doesn't bounce and it actually rejects and it comes back down here, that's when I'm going to start to get really worried about an insane acceleration to the downside, right? And then I don't believe that any of this is going to, provide much support. I think 16 would, have a bit of a chance, but this getting tagged right here and bouncing back above the 20k support, previous all-time high from the previous cycle, etc., and then coming down and losing the low here, I think that point there is someone or someone's in a lot of trouble. So if that's going to happen, I think it's going to go straight down. And that would be ludicrous. It would be insane, because that's, we just had like a week where we pretty much lost like, let's say 30%, 40%. And, let's say you bounce, but you don't bounce to 25 or 26 or 28, which, would be not so strange to see happening from here. That would be another 30, 40% to the downside. So full-fledged capitulation, and something has to be broken. So I don't think that's gonna, happen straight away from here. It makes a lot of sense that, after this, wild acceleration, I think, the volatility hasn't been this big since, if you have to compare it, let's try a log scale, hasn't been this extreme since, arguably, November, December 2018. This was very volatile as well, March 2020. I think I have a way of visualizing it. So this is a, realized volatility kind of algorithm down here. You can see here the blue line is, the higher it goes. I call it fear index, but it's a measure of how overextended to the downside we are, and the red backgrounds, the notions of this market getting very overextended to the downside. Doesn't mean that it's a full reversal always. When it gets like the dark red, there could be a bounce and then, further sideways and then continuation to the downside. But generally what we've seen is the dark red backgrounds marking some insane strong downside move that then fizzles out and reverses either sideways or like here, a little bit of a bounce and then further sideways. There's been historically one occasion in the past, and I think it was in 2012, where this blue line actually ended up as high as this region. So, if this time is different than, most of what we've seen throughout history of Bitcoin, obviously I do think that, everything's, if that's the case, everything is super screwed. But if we have to go off, previously recorded volatility to the downside, there is some downside left to be had here, maybe at best, but then there should be at least a counter trend rally. I think any bounce here, unless something changes in the macro, is not going to be a full-on reversal into continued bull market. If you think that this was the start of the bull market, or this was the start of the bull market, I don't think that any bounce up here is going to be continuation of that. But it's difficult to trade right now, because if you go back to this chart, and sorry, I don't know what it is with me and burping, but maybe it's the coffee or the talking. So anyhow, what I'm trying to visualize here is that we're in some insane downside volatility, and this bounce is it's not the biggest, but it's there. And if it doesn't manage to pull through and it comes back down here, I do think it's going to exhibit some of the volatility that we've seen here. Maybe not 1-to-1, maybe slightly slower, but still that was an insanely fast move. It was faster, stronger than the move that we had here, in my opinion. So then it's bad, right? So yeah, I do think there's an opportunity for price to come and retest the level here. We talked about that last week. And if that's the case, if we go there, is the entire market going to bounce? I do think the entire market will bounce, but will alts manage to keep up or have higher beta than Bitcoin? I think there's an argument that it won't. Like if, for example, we look at Bitcoin dominance, it's coming back into support levels. Maybe it can come down here. I don't think it's going to come down here. So I think this is going to kind of, form a bottom. It kind of depends also, what assets you're looking at, because this is an aggregate. I do think that this is, finding a bottom here and then continuing to here, and then, the levels that we spoke about in previous videos. And then, if we look at ETH, this is the old chart we've been looking at forever. Generally, at this point, I'd say there's a good chance for ETH to rally into the monthly here, because it's hugging these two lows here. I mean, it does happen that, you hug it and then you come down. And this is resistance until it isn't. So I guess you could, short it. But once it starts to come above it, I do think it's going to rally, at least for the monthly and possibly for the X right here. And then my thesis is probably, my thesis on BTC dominance is probably invalidated, because ETH is such a large part of the dominance calculation, if that makes a lot of sense. So dollar, it's kind of finding support on, the long-term high here. if it's going to lose it again, it's probably, a reversal. But so far, there's not a lot of reason to think that the dollar is going to lose strength outside of, Japan and China dumping treasuries for whatever reason. I think the reason they're dumping treasuries is because they expect more inflation. The question is, though, do they expect more inflation in the dollar system than in their own system? Because they're both acting pretty loosely on the monetary policy. So if they keep dumping treasuries, and I'd assume they do it because they expect more inflation in the dollar system in terms of what things are priced in. Maybe that even hints upon further destruction of the Western hegemony and pushing towards, I'd say, maybe deepened state of the war. And we saw today that Lithuania is going to implement a kind of blockade on Russian goods traveling through Lithuania to Kaliningrad, which is a piece that's kind of only accessible through European soil or by boat from St. Petersburg. So it's kind of a provocation it's a provocation of Russia. And that in itself is, I'd say worrisome. I think it's the biggest provocation the West has given, and it's approved by the European Union in Brussels. So very interesting stuff. I know that Russia back in April said that if they would be threatening with closing the railways for those goods to be transported to Kaliningrad in any way, shape, or form, that Russia would react to it. So maybe that was a bluff, maybe that wasn't, but it seems that Europe is now implementing it. And question is how Russia is going to, respond to that. And obviously, if war is going to escalate, it's going to put pressure on the dollar. Because then more countries will have to be picking sides and stuff like that. And if it turns out that a lot of countries at that point are willing to use less and less dollars, and they can go and have trade with Russia/China based on different currencies, then obviously the dollar is gonna find trouble, even though they're hiking at super fast paces. And what we can also do is just have a quick look at the rate expectations for September and March. March 2023 is expected right now. It's traded hedged at 3.8%. So right now I think we're at 1.5 to 1.75% Fed funds rate. And as you can see, 3.8 for March 2023 and 2.5 for September. So 2.5 for September means that we're going to see, I think they're expecting two more 50 basis points or 70, 175 basis points, and then another smaller one. So if this starts to jump throughout summer, then we can expect the Fed to keep on hiking at the pace that they're talking about now. If it doesn't, we may have to reconsider or think and see that the market is, calling the bluff on hiking that strongly. So keep an eye on that. I think that kind of covers it. Gold hasn't really moved. Oil took a hit after the rate hikes. Natural gas in the US did, but then again, the European gas prices rocketed like 60%, 50%. So I guess that in a couple of weeks' time, when the US can start shipping natural gas again, it's gonna, even out again, and natural gas is gonna be, US natural gas is gonna be a long trade by then. MicroStrategy, what a joke. Yeah. So to be conclusive, I think there's I think there's a reason to take a long trade, not pour your entire fucking portfolio in it. But I think there's upside in the week ahead. If not, market's really in trouble. Keep in mind that some of the traditional markets currently are closed. So tomorrow, S&P 500 is going to be quote unquote open again. Obviously, the futures are trading, but tomorrow markets can fully move at full capacity again. I think that's it. Thanks again for Prime for sponsoring, and guys, consider signing up. It helps me, it helps them, and I'm going to catch you, preferably on Thursday. See how things worked out. Tomorrow, live stream with Ledden, and I think around 10 p.m. Central European time. So that would be 6 p.m. Eastern in Europe, in the US. So stay tuned for that, and catch you on Thursday. Peace.